on top of the silver price 25% or whatever the number happens to be. Some applications there are some applications right now that basically the price of silver, it's as high as it can go. I mean, if you add another 10, 25, 50, whatever the number is percent as far as the tariff goes, then it makes it not work. The problem with silver is there's not an alternative to silver in so many of these different uses, whether it be solar, medicinal, technological. Silver's the best conductor there is. So there's not a replacement for it. So if the price of silver goes higher, what do they do?
In today's news recap, China foreign reserves increased to $3.2 trillion. China's foreign exchange reserves increased to $3.209 trillion at the end of January. Official data showed Friday after falling in December. The People's Bank of China said that foreign exchange reserves edged slightly higher to $3.209 trillion in January 2025 from $3.202 trillion in December 2024 and above forecasts of $3.2 trillion. The U.S. dollar index fell while global financial asset prices climbed last month, driven by macroeconomic data from major economies as well as monetary policies and expectations of key central banks. The State Administration of Foreign Exchange said in a statement, the country's reserves rose in January due to the combined effects of factors such as currency translation and changes in asset prices, according to the statement. The fundamental conditions and long-term trends underpinning China's economic growth remain strong. These factors will continue to support the stability of China's foreign exchange reserves. The administration said the yuan weakened by 0.7%, while the dollar was little changed against major currencies. Meanwhile, gold reserves were at 73.45 million fine troy ounces, above 73.29 million in the previous month. Their value jumped to $206.53 billion from $193.43 billion, in line with a surge in gold prices. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
There is a physical gold market tightening already in place. And I mean, you're seeing that, you're just seeing that on COMEX. You're seeing it because LBMA is having to ship metal. I mean, 400 tons, that's a lot. That's more than what COMEX delivers probably in a year's time. So there's already tightening from the standpoint of, big money. I can tell you the retail demand in the United States has definitely slacked off, and we're now seeing a huge amount of sellers. And I think that's a function of the real economy has been much softer than has been reported. People have eaten into their savings, and they're liquidating gold, they're liquidating silver to survive. I think the real story, when all is said and done, is not going to be gold, but I think it's going to be silver. And I think the March delivery month is already starting to shape up where there could be huge delivery demand and potentially a failure to deliver. And I've said all along, I thought that the fuse would be silver. And once that went off, then gold would immediately go off. So I don't think there's going to be I do believe that the deliveries will be done for February gold on the COMEX, but I think the real problem is March silver. If you look back, and I mean, you can look, going back to the 1980 episode. Just go look back, and you'll see that the reality is, because silver is such a small market, that sentiment and flows affect silver far greater than gold. And I guess the easiest way to explain that is, in a bull market, silver goes up faster than gold, and in a bear market, silver goes down faster than gold. So in my mind, the reality is that once there's a trend that has begun, silver leads, gold does not. To this point, and I mean, obviously we've had a pretty good run. To this point, silver has not kept up with gold in this particular move. But if you look at past moves, I mean, go back to, what was it, 2010, 2011, gold ran up to $1,800, $1,900, but silver ran from, I think it bottomed at $15, $17 and ran to 50. I mean, that was a triple. And then you hit the top and silver bleeds out faster than gold. So I think if you look at past events, just look at the correlation. Silver has more volatility than gold.
In today's news recap, China to start trial for insurers to invest in gold. China's National Financial Regulatory Administration revealed on Friday the initiation of a trial program aimed at integrating insurance funds into gold investments. As per the organization, this initiative, named the Pilot Program of Insurance Funds Investing in Gold, is designed to broaden the channels for the use of insurance funds, optimize the insurance asset allocation structure, and promote insurance companies to improve their asset liability management level. Additionally, the agency stated that it will diligently monitor the advancement of this pilot, reinforce regulatory oversight, and foster the growth of insurance funds investing in the yellow metal. What do you think of this? Is the master plan being revealed in front of us and no one is paying attention? Before we show you more clips, smash the subscribe button and check out our huge discount on NordVPN, the fastest and most reliable VPN on the market. This VPN service is a perfect fit for smart stackers who want their privacy protected and don't want their data compromised by prying eyes. For less than the price of a cup of coffee, secure your internet access and get 3 free months with our promo. Believe me, the only problem you'll ever have is that you didn't get it 6 months ago. Let's get back into the episode.
I'm not sure that silver is going to come into play on a country-by-country basis from a monetary standpoint. What Russia said was they did single out or highlight silver, but they did, I think in the announcement, if you go back, you'll see that they announced that they were going to, continue buying gold, but that they were going to buy other commodities, including silver. So I think they highlighted silver, and I think that's an easy way, for them to shoot an arrow, if you will, at the West, because look, Patrick, if you and I know that there's been a deficit for the last 4 years, and this will be the 5th year in silver. If you and I know this, Russia knows this. So what did they do? They tightened down the screws. Because they've got people smarter than you and I that research this, and they fully understand that there's going to be a failure to deliver. Do they want to be the ones that go in and, buy up $5 or $10 billion worth of silver and blow up the entire Western system? No, that would be like a declaration of war. But it works, and there's some traction by them saying, we are going to buy some silver. Well, what's their alternative? Why would they not continue to buy gold? They fully understand that the U.S. basically is an insolvent Ponzi scheme. So they understand that their holdings in dollars are going to decline. So they're looking at their balance sheet and saying, this part of our balance sheet is going to decline. How do we protect that? How do we hedge that? And the obvious answer, and truly the only answer from a monetary standpoint, is gold. I mean, yeah, they could do it with silver, but how? I mean, you can't go in and buy. I mean, there's no way that sovereign wealth funds or treasuries or central banks could go in and buy $5 or $10 billion worth of silver because it doesn't exist. That would blow the market up. So they've got to do it in gold, which is more liquid. So the supply is not increasing. And if you go back to look at a chart, go back to, I think it was October, November of 2023, when the U.S. basically confiscated 300 billion of the Russian reserves. The following day is when gold took off. I mean, the bottom was made the day of the announcement that we were sequestering the Russian reserves. And what that did was it created demand from sovereign central banks, sovereign wealth funds, and sovereign treasuries. Because these countries looked at what happened and they said, hey, if they can do that to Russia, they can do that to us and not even blink. So it's a way of foreign sovereigns, quote, getting out of the system.
What do you think about Bill Holter's insights on the BRICS nations, the silver squeeze, and the potential explosion in gold and silver prices? Are we really on the verge of a massive shift in the global financial system? Let us know your thoughts and predictions in the comments below. Do you see silver and gold skyrocketing soon, or do you think the squeeze might ease up? Let's discuss it. Now, check this video right here because it's a perfect fit for you, and I'll see you on the other side.